If you're worried about your 401k taking a hit the next time the market crashes, you're not alone. Many retirees are facing the same fear, and the last thing you want is to be caught off guard when the next downturn hits. In this video, I'm going to walk you through practical steps to keep your 401k safe from the next market downturn. By the end of this video, you'll understand how to protect your savings and why some of the smartest investors are turning to a gold IRA as a reliable shield for their wealth. Before we dive in, if you're serious about protecting your wealth in the next 2 weeks, click the first link in the description to get a free gold IRA guide. Thousands of Americans are choosing gold IRAs to protect their savings, and you might want to consider why. Now let's talk about what you can do to shield your 401k from market volatility. The first thing you need to do is make sure you're properly diversified. You've probably heard this before, but many people still fail to diversify effectively. Keeping your 401k funds all in stocks or bonds is risky, especially if the market takes a sharp dive. Consider allocating a portion of your portfolio into safer, more stable assets like precious metals, which tend to hold their value even in times of economic uncertainty. But here's the thing. Diversification is only one part of the equation. You also need to ensure your 401k is in a position to weather the storm. If you're nearing retirement, your risk tolerance should be much lower. Instead of holding on to high-risk stocks that could lose value overnight, think about reducing your exposure to volatility. You want your 401k to provide you with steady growth, not unpredictable swings that could wipe out years of gains. Now, you might be thinking, what about bonds? Bonds have long been considered a safer bet than stocks, but here's the truth. They're not as safe as they once were. In a rising interest rate environment, bonds can lose value, especially long-term bonds. So, while bonds can offer some stability, they shouldn't be your only hedge against market downturns. And this is where gold IRAs come in. Gold has been a trusted store of value for thousands of years, and during times of economic turmoil, it tends to increase in value while other assets decline. It's not just a hedge against inflation, it's a safeguard against a volatile stock market and the ups and downs of traditional retirement accounts. If you're looking for a true safe haven, a gold IRA could be your best move. If you're still on the fence about making the switch, think about this. When the next crash happens, the people who hold gold will likely see their assets grow or at least retain their value. Meanwhile, 401k holders invested in the wrong assets may see their savings dwindle. That's why it's so important to consider alternatives like gold IRAs now, before it's too late. Now let's talk action. You don't want to wait until the market crashes to realize your 401k isn't as safe as you thought. Diversifying your retirement savings with a gold IRA is one of the best moves you can make right now. This is especially true if you have $100,000 or more in your IRA or 401k, or even if you're sitting on over $5 million in savings. Gold IRAs are ideal for people in your position who want peace of mind and long-term security. Again, if you're ready to take action and protect your wealth, click the first link in the description to access a free guide on gold IRAs. This guide will give you everything you need to know to get started and safeguard your future. Don't wait until the next downturn. Take control of your retirement today. Thank you for watching, and I hope this video helped you take the next step in securing your financial future.